Hey, welcome to the Guaranteed Retirement Guy. My name's John Stevenson, and I'm going to talk to you today about the 7 safest ways to grow your wealth in retirement. Okay, so what are they? Well, a lot of them won't surprise you, but let's talk about them. Okay, you've got bonds, you've got dividend stocks, you've got utility stocks, you've got fixed annuities, you've got bank certificates of deposits, or what we call CDs, you've got high yield savings accounts, and you've got a balanced portfolio. Those are the 7 ways, but let's talk a little bit about those in a little bit more detail, because there might be some things that you're not aware of that will help you in making your decision, okay? Because we want to make sure that you have the most growth, but we also want it to be the safest as possible. Okay, especially if you're thinking about retiring right now, or maybe you are already retired and you don't want to be pulled back into the workforce because you put some money into something that was not as safe as you thought it was. Okay. All right, so let's talk about bonds. Well, bonds are always seen as something that is safe. Of course, it really depends on the type of bond and what you're looking for. If you're looking for income, if you're looking for something that pays a high amount of interest, of course, right now in our environment, we're getting a lot of interest off of bonds. Okay, but bonds, the prices for bonds are a lot different than they were a few years ago. Okay, so when people purchased bonds a few years ago, well, they were priced quite a bit different than they are now because interest rates are so much higher right now. So what happens to bond prices when interest rates go up? Well, they typically go down. And so if you bought a bond a few years ago, then your position, well, if you sell that bond, you get out at a loss, right? So a lot of people won't, but sometimes they will if they can get another bond that's paying a higher interest rate. So the problem is your yield to surrender goes down because you're still suffering a loss at selling the bond to get into another bond that pays higher interest, okay? So that's kind of the downside of that. So let's talk about dividend stocks. Dividend stocks are great, and there are stocks that have a long history of paying dividends, but sometimes I'll skip a dividend. Sometimes I'll lower it. Sometimes I'll raise it. It just depends. It's not guaranteed though. And so that's what you have to think about when you're investing into these, that even though they are paying dividends now, what will it be in the future? Okay. And then of course, what could happen to those if the company suffers a huge loss, if there's a stock market crash, or just a lot of world events can affect even dividends. Okay. All right, utility stocks, typically those type of stocks, as we all know, utility companies are kind of boring, but they're stable because people need to have power on. They need to have their gas, right? You need to have those things to heat and cool your home and just basic needs that we have today. So because of that, utility stocks, typically we don't see a ton of growth, but a lot of times people will invest in those because they want the dividends from those, and that's a safer way. Sometimes they pay dividends, sometimes they don't. So that's one way to do it. And then fixed annuities, and as you know, I am the Guaranteed Retirement Guy, and annuities are contracts, and they're guarantees, and they can provide you a guaranteed amount of growth. So if you want a certain yield to surrender that is absolutely guaranteed, you can get that. Okay, so if you're worried about bond prices fluctuating or changing and you want to make sure you can lock in a high interest rate, bonds right now are paying well, but some annuities are paying even more. So if you're looking for fixed annuities or MYGA annuities, what we call multi-year guaranteed annuities, those are really, really good right now. They're paying a lot. And if you're looking for income, fixed index annuities with income riders, a lot of times the payout rates are between 7 and 8% guaranteed for life. Yeah. So if you want to look at those, that's a great way to grow and protect your wealth and be safe about it during retirement. Okay, let's talk about CDs. Well, CDs are like MYGAs, what we just previously talked about with fixed annuities. And of course, they tie up your money and your tax. So it's not deferred like an annuity is. Annuity, you can get deferred growth. Your taxes are deferred. Okay, so you don't have to pay taxes every year like you would with a CD. Okay, high yield savings account, those can be good too, but a lot of times people don't realize that they are not as liquid as they might want you to believe. So sometimes it may take a while to get your money back out, okay? But you can get some decent rates. At least right now you can. And of course, the last suggestion is a balanced portfolio. Just remember, anything that is balanced, you're going to get less. You'll get less as far as growth, but you'll also have less risk. So if the market does crash and everyone goes down 30%, you might only go down 15%. That's pretty good. But when the market goes up and everyone's making 20% and you only make 10, you might be upset about that. Okay? So yeah, I'm risky. I like stocks. I like growth. That's just me though. But I'm comfortable with that because I have annuity contracts that's going to take care of me and my wife forever. Okay. That's my plan. Okay. I use annuity contracts to give me guaranteed income. So I just stack my pension income, and I might use 3 or 4 of these contracts, and I might activate income when I'm 62, just for one of them, and then maybe activate some more income at 65, and then 68, and then 72. And I could just stack it and really grow my income, and I have the protection of a portion of my wealth. And then if the market's going crazy and it's crashing, we got wars, we got another savings and loan crisis or whatever, I don't care, because I know it will eventually recover. And while it's waiting to recover, I've got the annuity payments, my income that is guaranteed no matter what, coming in. That's why Babe Ruth was so comfortable when everything crashed in 1929, because he had annuities that provided income for him for the rest of his life. Okay. So it's really good to have that peace of mind. And that's why when I talk about safety, there are so many different ways to invest. I mean, you could buy put or call options. Okay. There's so many sophisticated ways to protect or hedge your positions in the market. But if you don't want to deal with that, you don't want to deal with the uncertainty of those instruments, the uncertainty of that type of investing, even if you're good at it, you might want to look at annuities. Okay. Fixed annuities can give you guaranteed rates of growth no matter what the market does. And if you're looking for even more income, more guaranteed income that you are guaranteed not to outlive, as well as your spouse if you're married, then a fixed indexed annuity with an income rider might be right up your alley. Okay. If you're looking for guarantees, you want growth, and you want as much income as possible, it might be worth scheduling a call with me. So there's a link below this video. You'll notice it will go straight to my calendar, and we'll talk about whatever you're looking for. If you're looking for annuity with just a fixed rate, we'll look at that. If you're looking with, maybe you have a spouse that you guys are looking for income, then a fixed index annuity with a joint payout might be the best thing for you. And we'll look at everything, okay? I'm not going to hold anything back. We'll show everything that's available, and you might be surprised on how much you can get. And a lot of times when people look at these and they realize, wow, I can put in this much money and I get so much more in income later on, and it's guaranteed. If I live to 110, it continues to me and my wife. Let's go. And that's why it's so popular right now, because people want guarantees. We all want growth, and it's fun when the market's going up. It's fun. We all want to be part of that, of course. But you know what? It feels even better when you have that guarantee put in place for even just a portion of your portfolio to cover your income needs, so that if something happens, if the storms rage, you've got that shelter. Okay? So I hope that helps. I appreciate you watching. And again, if you want to schedule a call, there is a link below this video. Otherwise, we'll see you next time.